Time for more tax education from Manjit Singh, CPA PC.
Good morning, viewers. My name is Kusum Ramachandran. I'm an enrolled agent at Manjit Singh CPA PC in Falls Church, Virginia. And today, Mr. Singh is going to enlighten us about the home office deduction that continues to be a matter that is greatly investigated by taxpayers. They always want to claim the deduction, and the service always wants to deny the deduction. So here we go.
Folks, good morning. This is Manjit Singh coming from Falls Church. Home office deduction. Is it a good thing or is it a bad thing? It's a hot topic. It's a red button with the IRS as far as the audit is concerned. A lot of people, they do tell me, Manjit, I have an office in the, at home, but I don't want to claim the deduction because I'm afraid of the audit. To be honest with you folks, I like to be aggressive with preparing the income tax returns to the extent as long as it is legal. Okay, I don't want to leave an extra dollar on the table, whereas I can have it without being afraid of being an audit. Now, what do the IRS look at it? The definition to take an office at home, first, it should be used regularly and exclusively for business. It should be separately identifiable area. You cannot have a conference table, which is your dining table, as a conference table during the daytime and dining table at night. This is not an identifiable area which is used regularly and exclusively for business, because in the morning you're using it for conference, at night you're using it for dinner. So there's no exclusivity there. You have to be clear with that. For example, if you have a sunroom that you can identify it, better yet, if it has a separate entrance from the outside, you can use that sunroom as an office at home. Now, must be one of the following: the office at home. It should be principal place of business, a separate structure not attached to the dwelling unit used for trade or business can also be used as an office at home. For example, you are in the business of as a florist, and in the backyard you have a separate structure where you are growing the shall I say weeds or the flowers and the bedding and all those things. The greenhouse, the structural cost, if you have to maintain warm during the snowy days, the electricity cost will be a direct cost that will be an expense that you can claim. The other thing is, you should be meeting on a regular basis with your patients. If it's a doctor or a dentist, as an accountant, I should be meeting my clients to do the tax advice or taking the papers and going over the papers to review and prepare the tax returns. And it should be in the normal course of my business, which it is. So these are the conditions that you have to be able to meet to claim the office at home deduction. I would like to pass the buck to the Kusum now and ask her, what are the items that you can claim as a deduction?
We might also want to add that employees, other than self-employed people, could also have a home office deduction, in which case, of course, that would have to be for the benefit of the employer. It has to be a stated condition of employment that the employee maintain a home office. That's the only case when an employee can claim a home office deduction. Having said that, what are the items? Everything. You have to identify the area. Let's say it's a 10 by 10 room in a house that's of 1,000 square feet. Then your 10% is your home office. Then you would deduct 10% of your mortgage interest, your real estate taxes, your utilities, your homeowners dues, your homeowners insurance. In other words, anything that's related to the maintenance of that home, but in the percentage that would apply to the home office part of the home. On the other hand, you could also have direct costs. In other words, if you do something that's just exclusively in that home office, then that would be deductible in a total. If you built, say, let's say, shelving into your office, that would be, you wouldn't have to take a percentage of that, you would take the entire amount. And Mr. Singh would have some more information about this topic for you all.
Kusum, you mentioned about the employee office use. We had a few years ago a case where the office staff was being asked not to come to DC to work, but they were encouraging employees to work out of home. So in that situation, we had requested our client to get a letter written from the employer that it was for the benefit of the employer that the employees are being asked to work out of home. Our real estate is very expensive in DC, and therefore they didn't want to rent more space, so they encouraged it. Having said that, the mortgage interest and the real estate taxes for an individual who is an employee is treated slightly differently on the office at home deduction. The whole thing is claimed on 8829 form, office at home deduction, but for an employee who's doing it, it is on 2106. And Kusum had just talked to me about it earlier that I was not aware, and I'll ask her to brief it up a little.
Another important aspect, though, of the home office deduction is that unless the business is profitable, you're not going to get the benefit of the deduction. However, you can carry over unused portions to the following tax year. And the point that Mr. Singh raised about the mortgage interest and the real estate taxes, for an employee who has a home office for the benefit of the employer, these are deductible in total, and they're on their regular line in Schedule A. You configure them into your 8829, which flows through to your 2106, but that's for limitation purposes, not for actually apportioning into your Schedule C. Whereas when you file a Schedule C, you get a percentage of the home mortgage interest as well as the real estate taxes on that form. And the reason for that is that then reduces your total profit on which you would pay your Social Security and Medicare taxes. So I guess there's a benefit, whereas when you're an employee, these deductions are already subject to 2% of your AGI and are not deductible in total. So that would make a double whammy for someone who's an employee who's claiming that. And that probably is the reasoning beyond allowing the home mortgage interest and real estate taxes to be deductible in full on your Schedule A for employees.
So now we have talked about what is our office at home deduction, what is deductible, and is an S corporation individual allowed to claim it? Will it be claimed as part of an employee expense, or is it going to be claimed as a rental expense? The seminars that I have attended, the practitioners there have suggested that you prepare the form 8829 as if you would do it for a sole proprietor, and come up with the percentages and the number, and have the corporation reimburse you on a monthly basis. Prepare an expense spreadsheet, expense report, and include it there. As long as it's a reasonable amount, let's say $200, $300, $400, you please take it on a monthly basis as if you were paying the rent to somebody else where you took the space. So this is for the S corporation individuals and the C corporation individuals. For sole proprietors, it is done on the form 8829 and reported on Schedule C. And same thing will be done for people who have limited liability corporations, and that is disregarded entity that I like for people who already have big W-2s. I like them to have it on Schedule C. It makes the things cleaner and simpler. Having said this, Kusum has an announcement to do on the OVDI program.
Well, there seems to be another new version that now doesn't have an end date. So there's the 2012 Offshore Voluntary Disclosure Program is very, very similar to the 2011 one, except that the amount of the penalty is now 27.5%, which is up from 25%. So those of you who have not come compliant, that have offshore accounts or rentals or anything overseas that you have not brought into your U.S. tax return, now is the time to come clean.
This announcement was made by the Internal Revenue Service on Monday, January 9th, 2012. Folks, get ready. And with this, see you next week.
Goodbye.